This is Justin Pulitzer. This is my weekend review video for Sunday, May 21st, 2017. This is being shot on Saturday, though, so I don't have the benefit of seeing the Sunday futures, but that's okay. We'll discuss what would happen either way. So, in last weekend's weekend review, I discussed that I thought we were due for a bit of a volatility pop to retest the downtrend line. And like clockwork, we got it. Let me zoom in here. So you can see we had a high here of 1628. High here was 1630. So this constitutes, yes, ladies and gentlemen, a look above and fail. We had the same thing happen here, although this was a higher high in the range, which I had mentioned at the time here. This was basically an equal high. With a look above and fail, we're back down. My guess is that we may see volatility chop for a little while, but this triangle that we've been in is ever narrowing, and it's only a matter of time until we do break out of it. It may be more by time than by price, but that declining trend line should probably, its relevance may wind up winding down shortly. With regard to volatility, you can see we tried breaking above the 200 MA. Anytime there's a break above the 200 MA, there tends to be acceleration, although we are quickly back down into like this 50-100 MA area. Gap could fill here. So I wanted to save this for my SPY analysis, basically, that I think if we gap down big on Monday, I think that could be the kind of the start of the summer correction. If we're not down big or if we're up, I think we could see new all-time highs, but I'll cover that. Let's cross that bridge when we get to it. In the meantime, dollar, this Dixie is basically the one I've been using lately. This one is measured against the euro. I think that there was a lot of pent-up fear with the French elections. I still think at some point the euro is not going to be long for this earth, but that day is not today, and that could last some time. So I think that they've had a reprieve, a stay of execution, if you will, and the dollar now, the premium in it is coming in. There's some good news and some bad news. The good news is that the trend is broken. The bad news is that there's only a little bit more wiggle room down to a channel low and 61.8% Fibonacci retracement, as well as sort of an old range breakout and old support. So I do think that there could be a little bit more move down in the dollar, but I do think that we are going to be due for a rally after that occurs. The ETF that I watch, not surprisingly, is also right here, right on the 61.8 and basically right on the trend line. It's even a little bit through it, but we have a reference low here. The channel low is still a little nugget lower, but I do think potentially slightly lower, and maybe a rally is due. The bonds. So there is a funny thing that happened on the way to doing these videos, and that is the understanding of the inverse relationship between yield and price. The Main Street financial media is under the impression that low interest rates are bad for stocks. Now, if you take a look at even a rudimentary DCF model, discounted cash flows, just Google it or Investopedia or wherever you want to look it up. The discount rate is measured, a large part of it is by the risk-free rate, which is, of course, treasury bonds. If that rate is low, think of it as a numerator and a denominator. If you have a lower denominator, your end product is higher. So how are low interest rates bad for stocks? The equivalent that they always jump to is that lower interest rates must mean recession, that a recession is coming. Now, in and to itself, in a vacuum, you might be inclined to agree, except when you start looking at economic data. And we had a slew of PMIs globally as well that looked better, that there seems to be a little bit of a reflation in play, as well as the last three Philly Fed indices being blowouts. I'm not even talking about close, I'm talking about like secretariat style blowouts. So, yeah, I don't see a recession coming here anytime soon. The growth is a little bit stagnant, and with the distractions that I'm going to discuss momentarily, with the Trump administration and the whole the whole political risk here that's been going on, I think that that's what's also kept a bid in treasuries, because the Fed has basically indicated that they're looking to raise interest rates. And if you keep having economic data that's solid, they just may do that. So as long as the, let's keep it simple here, 123.15. As long as we're above 123.15, I think 127s come into play. If you're below that, then lower is into play. Maybe 120s, 119s again. We seem to be ping-ponging here in a bit of a consolidating range. You have a 200 MA coming up. And if you can start clearing the 200 MA, then you're talking about maybe significantly lower interest rates, potentially even to fill up the gap. So 200 MA here is going to be very key, and it should be tested in some short order. The aforementioned political risk. Let's take a quick sidebar to discuss this. And I kind of teased this video saying that I had a statistic that I wanted to share, and I thought people might find that interesting. And the fear here is that, of course, that the Trump agenda of repatriation, tax cuts, repeal and replace of Obamacare, and infrastructure are going to be delayed, meaning growth won't be coming in as quickly, and you won't have the same type of profits that you might have had if that happened quicker. There's a lot of noise around his agenda, the most vocal being this whole Russia collusion investigation. And one of the things that I found interesting, and I grew up in New York City, I live in Williamsburg, which is like ground zero for Bernie Sanders' campaign. Full disclosure, I'm a conservative Republican. But I'm open to information, and I don't really so much have ideological dig in as I do like enjoy facts. And I can tell you this, I did a little research, I tried to give myself, play devil's advocate with this whole Russia thing. And I basically looked at what won Trump the election, and I found an interesting statistic. It was actually pointed out to me by a conservative radio host, Mark Stein. I will include that link if you're curious to hear more about this, because I'm only going to touch on it briefly, because this isn't a political show. It is a market show. But if you look at the public health indices in the states that flipped from Obama to Trump, there were massive declines in that, in basically rising mortality rates in places like, Chiron, Iowa, or Maiden, North Carolina, Cairo, Illinois, or Allentown, Pennsylvania, places like this. So take a listen to that if you're curious about this. And it seems to me a little bit far-fetched to believe that those states flipped because of given that the most correlated and relevant statistic, which is this public health data for those states that all flipped, had anything to do with Russian collusion. Just saying. So if you're interested in hearing about that, I'll include that link in the description below. Enough with that. We're going to get back to the markets. But like I said, I think that whole stuff is all basically BS. I think it's just media headlines, and I think it should resolve favorably for the administration. That being said, there could be some slowing in the agenda, which is, I guess, what has the market a little bit on edge. High yield. Not exactly the picture of a recession. We're making higher lows and basically bumping our head up against this 88 level and you've now had multiple touches, it might just go. I don't really get too concerned about this until you start losing the 200 MA. It's provided a lot of support. You can see we got above it here. We weren't comfortable below. Support, again, basically support, support, support. So until you start losing the 200 MA, I don't get too worried. And you have a big bunching of these moving averages here. You see the 50 and the 100. So it seems to me like this is probably going to be sideways to higher. If it were to lose that, then we could reassess. But I just don't see there being a credit crisis. There's not enough leverage in the system. And I was listening to an interview with Steve Eisman, who was the basically the guy from The Big Short. And he was saying the same thing, that there's not enough leverage in the system. And I had actually been doing a little research into that even before hearing that, and he basically confirmed my suspicions. Oil. So this is acting rather interesting here. You've had some lower highs and some lower lows, so technically the trend is still down. But we achieved my 2 times range. This was in an after-hour session and not RTH, which I don't tend to love, but we've come back up. I remember I discussed this potentially being a secure low. It has been. We marked some time, basically bumping our heads on this 49.61 below the 200 and 100 MA, and now we powered through it on Friday, which was technically now kind of a breakout. We have the 100 MA right here, so I am expecting some sideways chop, maybe back and fill, but we could challenge these 52s again and the downtrend. So I'm curious to see how this is going to play out. I'll say this, as long as you hold this like moving average confluence in the 49s, maybe this does want to repair. This I thought was a little bit more bearish, that we had lost trend, and I did think that we could bounce back up to here and thought it would reject, but we are now through it. I didn't like that we lost this low, because this would have basically been equal lows, but price wasn't comfortable down here, and we seem to be coming back up. A lot of people think they know and have an edge on oil. The Saudis seem to be very comfortable with oil prices higher. The move up was Russian, oddly enough, confirmation that they are looking for higher oil prices as well. And the Saudis, as we know, have Aramco coming online with their IPO in the not so distant future. I've heard it was going to be 2018, but early 2018, but we'll see. A couple of things that have me a little skeptical about the rally is, oh, what's going on here? Cancel. Let's zoom in. Is Exxon. We are basically in a big chop zone here. This could be forming a base. I can't tell you for sure, but that's sort of my suspicion. 80.30 is the key. If you lose there, I think you could try a right or right out short, or 83.88. Anything above that, I like right or right out long. So this is sort of a lateral range, and I'd like to play the breakout or breakdown or whatever. If you're a true technician, breakout could also means breakdown. There really is no breakdown. It's just breakout, up or down. CVX, that's the old Chevron. So the 50 MA was where we gapped below. It's been the resistance, and until you can clear that in like this 200 MA confluence, I think that it's going to be choppy. If this for some reason softens up and loses 103.82, I like it short for a move down to trend and range low into 97. So that could be a quick potential $6. How would I play that? Either outright short the stock, or with some type of put spread, meaning like buy these and sell something down here, or put ratio, buy these, sell 2 times the amount here, or a butterfly, buy these, sell these, and buy these. This stock has a big dividend. I think it's safe, and any move down sub 100, I like the idea of selling out of the money puts at Fibonacci strikes, 94s, 88s, wherever. I don't mind doing it longer term, particularly in an IRA. FXI, China. Also looking a little better, right? We've been well above the 100 and the 200 MA. We're basically just chopping along here, and I think as long as you hold the 50 MA, it's going up. If you lose the 50, I think you could play for 100 and 200 MA test. The BABA. Okie dokie. All right, so I had said that we reached my 124.62 and it was time to bounce. And we came down pretty hard, pretty fast, down to 114. A cool 10 points. Held trend. I was actually a little surprised at how well this rebounded and actually now made a new high, and we did get my 1.618 fib extension, but channel high is a little bit higher. So I'm a little skeptical about how much higher this can go. I guess you could, I don't know why I don't have a 2 times range in there. Let's maybe manually add in the curve. And we'll make that a 3. So that would be like 133.73. Maybe it comes up and grinds or goes sideways and then does it later on near these earnings. Would be interesting. That said, Friday was a look above and fail, meaning above this high and then back into range. And you had a little bit of a sell-off into the close. I think people were booking profits, the people who bought down here. I'm not trying to read too much into it. My guess is BABA could be, you could see sideways for a little while. These tend to lead to lower, but we'll see how that plays out. BABA is sort of like the Chinese Amazon, and you can see the gap over the 100 MA was the key. Any retest of this 100 MA, I'll be an out-of-the-money put seller. Or if you want to be a Chicken Little, sell out of the money puts at or below like the 100 MA, because that area should support. The 200 is pretty close, and by the time it gets there, that area to me would make sense. The other Chinese stock I follow is the BIDU. You can see I drew in this this sort of wedge, and we're firm, right? It's been retesting this like 188.54, moves above it haven't been so sustainable, but we are making some higher lows now and starting to make a little bit of higher highs. So if you want to be bullish here, I wouldn't mind selling out of the money puts, down near the triangle low, because if this were to fail and break down, that's sort of where you'd go. So if you want to play a Chicken Little, you have this big confluence of moving averages here. I just don't see this coming and just completely collapsing at this point. It looks to me like it wants to go up. Like, look, you had the breakout, the pullback to retest the backside of the kind of the old downtrend and then back up. So this to me looks okay. I actually think BIDU is starting, famous last words, but BIDU looks like it's trying to turn the page. A little Metallica there. It's a great song, by the way. I'm not going to sing it for you, don't worry. All right. I was thinking about it there, but caught myself. Anyway, all right, so IBB is looking a little bit better to my eye. Not fabulous, but let me show you something. You can see this is like, came up. We've tested this area so many times, and it's just chopping. 200 MA is at the channel low, so any pull down to like that 200 MA, I like selling out of the money puts, maybe below 271s. I think that could be an interesting trade. You really need to power through this area, though, and if you could do that, then I think this thing will be ready to kind of fly. So I'm warming up a little bit to this, but it's been really, really messy with these really large kind of like straight line pullbacks. So oddly, you might want to consider doing strangles, meaning selling out of the money puts and then selling out of the money calls, playing just for a range-bound trade. That could actually be the play. If the Trump agenda does get delayed a bit, so will regulations on these things, and that could be good for drug stock pricing and stocks. So remember when I got bullish, everyone else was sort of bearish, and I noticed this breakout, and I said, you don't have IYT breaking out and going into recession. Look at this, you had this very long base, and the breakout. This did form now a bit of a head and shoulders. You have a neckline snap, and we're kind of held the 200 and rebounding to the neckline. So I'm a little iffy on the trannies here. I would love it down by the low. Look, a retest, like you broke out, then you round tripped it to retest the breakout at the 61.8 and the trend line. I think that area would be a screaming buy. But in the meantime, we're not anywhere close to there, and we now have a declining 50 MA, and the 50 MA is kind of was support, now it's sort of resistance. I don't really like this until you clear the 50 MA and break the downtrend. If you were to break the downtrend, I think we'd go up a lot. But this isn't acting very well, and I need to see, you can see we're now making some lower lows off lower highs. I don't like buying things that make lower highs and lower lows. I like to buy things that make higher highs and higher lows. So I need to see that pattern shift before I would get too bullish. You now have basically a successful 200 MA test. I would put a short order in below 157.65. I think that would at least see the channel low and maybe even get a little cascadey down much lower, because I assure you, I'm not the only one seeing this. This probably is also meaning oil might go higher, because transport's like low oil, low gas. You have a interim snap, and again, I'm into shorting the rally bounce on this here into that 50 MA with a tight stop, and would reverse if it were to clear. So one of those row deals. Copper, again, another one. This was another one I said Dr. Copper was breaking out, and I couldn't be too bearish. This has just been a big kind of bull flag, and you didn't even get the 200 MA test, and we're right up on the 50. If you can break this downtrend, you probably fill it up to the 282s. So 50 MA is really key here. It's now a negative sloping, and you have 100 MA right above it. So this area is the resistance. If you want to try quick shorts, you could try it against the 100 MA as a stop, but this is not looking awful to me. This just looks to me like lateral consolidation. This Freeport is a disaster, not exactly a pretty stock. This is sort of like a downward sloping head and shoulders, but those don't usually tend to have full articulation lower. I'm actually getting into these fibs. If we get down to 10 or below, I'll sell some out of the money puts at like 8 strikes, maybe even longer dated, to kind of start building a position in that. Speaking of those types of stocks, I'm jumping ahead a little bit to what I had been planning on discussing. I actually did sell some puts in this letter X down near the 61.8% fib. A tight stop below here, below this like 1855. If it loses that, I can't tell you that we're not going to see 15s and maybe 13s, but 61.8s in commodity stocks after this much of a move down, basically in a straight line, a gap down and multiple days down, it just seems to me like this is due for a bit of a bounce, maybe at least to the 20 MA, maybe even to retest kind of like the beginning of the gap. Tight stop on that though, below that low. Let's talk about gold. Gold, I love gold. If the dollar is going to bottom and have a rebound, this could get smackage. Let's keep it simple. This 50, 100, 200 MA confluence, as long as we're above that, I think gold goes higher. Below it is iffy to me for a retest of the 100 MA. Same kind of biz with the Silva, right? This looks a little interesting to me, bottoming-ish. This came down here. Remember I talked about getting in some longs. We bounced. It came down and now kind of bouncing again. I think this could see the 50, 100 MA. If not, it's just going to chop sideways. But I think that area is a target for me. Bitcoin. Getting into the cryptocurrencies, I'm not quite up to talking about Ethereum because I don't see much to talk about in the platform, but remember we talked about this breakout and I said I thought we'd see the 1.618 fib extension and maybe 2 times range. And I said this day, actually near the highs, it's time to book some profitos. I got trolled a little on the next day, but those people quickly shut the F up. We're back up here. Listen, this thing has moved. A lot. I would be in booking mode and wait for some sideways consolidation or pullback. Anything that moves up in a straight line like this, to me, starts looking parabolic. You do have a reference low in here. You have 3-day range. If you're still in it, and you could just use a 211 stop. That could also be an interesting short entry, though. The Goldman Sachs. So this is a bit of a head and shoulders, and it's not. Look, it's not the first time we've seen this pattern, right? This led to a very nasty sell-off here after this kind of right shoulder. This looks a little bit different to me, though, and I think this pattern could frustrate shorts for a little bit because you've got a lot going for it here. You have the trend, the trend from the low, and you have a 200 MA with a range low here, and you've spent a lot of time like chopping. Like, what is it waiting for? So I'll keep it simple. If you want to be long, try it against the 200 MA. Anything below there, get the F out of Dodge. Just do it. Get out. JPM. This is also a very similar type of a pattern. Range low, trend low. If you lose this, I think there's a quick short to the backside of the old up channel and the 200 MA and kind of this gap fill where I would be selling out of the money puts probably at 73 strikes and below. If we do get to like 80, it'd probably do a little bit longer dated and even add to that position small on the way down, even if it got down into this area. Because I do think that eventually this is going to go higher longer term, but short term there is a decent amount of risk in there. Speaking of risk, I can't even believe I'm going to recommend these stocks for a bounce, but this is getting a little much. Short term, this is getting whoa. All right. Oh, come on. Really? They made some changes in the platform this weekend, and it's driving me bonkers. So I want to show you something. Gap down, move lower, chop sideways, up and sideways. These were both gap ups that got met with selling. Here, gap down, move lower, chop sideways. Gap down, move lower, maybe, and you have 61.8 down here. 78.6 down here in 1974. I just think that this has moved a lot, and I think it's probably going lower longer term, but short term, this to me looks like it might want to bounce a bit. So I guess I could count it in selling either ATM or OTM Macy's puts for a quick bounce. Target, kind of the same. This actually looks a little bit better to me because you have a low and now a higher low, and you're above the 50 MA. So very obvious trade here to me would be long Target, and this is almost like a bit of a cup and handle on the lows. 50 MA, just keep it simple. Above, you could be long. Below, not so much. Walmart to me looks like, which everyone loves, by the way, looks like it's setting up for a great short. Look at this. You have a gap fill and a channel high after coming up from the bottom from the channel low. So any move into this area, what I'll probably be looking to do is sell out of the money calls or do some type of a right or right out short play up against the channel high. That is the Walmart. Let's talk about the major market indices quickly, and then we'll talk about those Momo stocks. So the SPY, this is the ETF for the S&P 500. It's known as SPY, right? Pretty sinister sounding name, but really not so much. So you had a big gap down here. This was on the news of the, that Trump fired Comey and they're, all this stuff. I think what the fear was on a day like this, when you've taken out multiple days, is that you get something like this. You get this gap down, they attempt the rally, and then you just get into a correction, right? Interestingly enough, we lost the 50 here. The next day was a bit of a rally. You held the 50, and then Friday was, again, more buying. This was a look into the gap that kind of failed, and you failed at the 10 and the 20 MA. So let's keep this very simple. The gap fill here is roughly the 50 MA. So the 50 MA has now been successfully tested, and I would say a second failure from a lower high like this would likely lead to a 100 MA test. Now, I said in the beginning when we were talking about the VIX that we were kind of due for the pop and then a pullback. I want to show you something. This here was the recent high, and this here was a look above and fail day. I know everyone is all hung up on the Trump news, but I venture to tell you we were due for a pullback anyway because of the look above and fail. This is a technical pattern that when you look above a range and come down, you usually rotate to the lower end of the range, which is closer down into these 231s. Or in this instance, I thought the 100 MA. So we move in stages, right? Like this. Remember, we were up, we came down, rallied to a lower high. You had this sort of, there must have been something here, and then lower. So that's what I'm a little concerned about this week, that if we have weakness on Monday that takes out Friday's low, the gap will fill, the 50 MA will be the must hold, and if we lose it, we'll see the 100 MA and down into these reference lows. So basically, you had the look above and fail from the top end of the range, and then you rotate to the lower end of the range. So 50 MA to me is key. I'm okay with BTD buying the dip or being long as the 50 MA holds. Below it, I think we see the 100. And if we were to lose the 100, we could see the 200. I don't necessarily think that's going to be the case. I think if there's weakness, we would see the 100 MA or like this range low again, and then probably bounce and chop, because when you come down from the top, you tend to hold. And even if there is a breach, I think it might not be that long-lived, because it's when you come from a top end of range, you've used up a lot of the selling pressure. The stops get run, but then you usually tend to have a throwback rally. If Monday is down big, like one of these days, I think it's safe to say the summer correction has begun. If we're not down and we're up, I think we'll retest these highs and maybe repair them. They weren't exactly, they were poor highs. And when you have a poor high and a lick, someone had told me that this high had an excess. I don't know that it did. I have to go back and look, but it's not a meaningful excess. Like it's not a tail, like a long tail, like one of these, and then you come down. I'm trying to look back in the chart to an example of meaningful excess. You don't, right? You get like these poor highs and chop and then fall out of bed. It's like the S&P is a very odd creature. I'm trying to look back. I don't see really any excess highs here. It's probably why we're still making all-time highs, right? You never put in that, that last gasp. So yeah, Monday to me is going to be the key. The expected move this week is $2.90. That would be to 241.21 on the upside, meaning a retest of the high. The downside, 235, which probably would accelerate a little lower to the 100 MA. That's my guess. IWM, not looking particularly pretty or particularly ugly, although it is weaker than the other ones because, look, why aren't we zooming better? All right, because look at this. You gapped below the 50 and went, and then we stalled below the 50 and 100. So if you want to be short IWM, and look where that closed a lot weaker, well into this day's range. You got to get long, in my view, above the 50 MA. If you want to remain or try short, you can do it against that 50, 100 MA confluence as a stop. Expected move, $2.20, 138.23 on the upside, 133.83 on the downside. Qs. So the Qs made a new all-time high, had that big liquidation break, and now kind of futzing around. It's above the 20, below the 10. If you lose the 20, if you're aggressive, you could try right or right out short, and then add to it below this like 135.87 for a 50 MA touch and a retest of the breakout. If we do come up, this could just continue drifting. So you could use, in my view, the 20 MA is the key. If you want to be long, do it against the 20 MA. If you want to try short, try it against the 20 MA. The expected move is $1.87, 139.71 on the upside, 135.97 on the downside. The other big names. Apple, this has been up and away, pretty bullish. I do think at some point this wants to see the 1.618 fib extension to 162. Shorter term, this is just so annoying. I'm sorry these charts are a little messy. I am a real trader, and these are the charts I use in case there was any doubt. All right, so you had this big break below into range, came back up and retesting it. So we're kind of like stalled a little at the 10-day MA. So I'll keep it simple. Remember we had this day, which was a similar kind of breakdown, and I said that the trade was either long above or short below. And remember, look, we had the gap here that was above. It took a little while, but then we went. So let's do it again with this day. 149.71 is the low. It's also the 20 MA. Prescient, because remember I said the NASDAQ key was the 20 MA as well. And the high of day was 154.57. So I think you could play long above or short below. Very simple. Where would the short below be to be? I mean, oh boy. It would probably to wherever the 50 MA is at that time and the channel low. So this day's range, the 517, I either like buy stopping it above the high or sell stopping it, meaning shorting it below the low. Amazon. So what would Brock be without chest, right? Of course, those are my Boogie Nights references. I'm naming stocks after movie porn stars. Who else does that but me, right? I keep it pithy. At least I entertain myself, right? I know you guys are probably like, this guy, what is he doing? All right, so we had this sort of look above and fail. You had this move lower, move up. Again, a kind of, this day was looking a lot more bullish at the end. It sort of, they sold it off to pin the 960. I think that Amazon is destined for higher, but it may want to like chop for a while. You really need to clear and hold above 965, which was the after hours earnings day low. Remember, you had this like lower, and I said this day was a professional gap, and I thought after that we were going to kind of go up. It did, but it kind of didn't do it as straight line as I'd have liked. So the key in my view here is going to be for this to get above and sustain the 965. If it were to come down, probably the 20 MA will be important. That was a lot of support before. So that would be a target if you were trying short, for example, or looking for a lower price for a quick right or right out entry. The 50 MA has been the key in Amazon. It's always a buy until it is not. That's sort of my take on that. Facebook, we got the progression line. We got the 2 times range. Oopsie. This is unbelievable what's going on with me tonight. With these, look, you had this range. You got the 1.618, you got the 2 times range and the progression line to the tick. Came down basically to the channel low, failed at the sort of the old channel high. I think this just needs time sideways to kind of work off this big move. Ultimately, I think this resolves higher, but I don't know that it doesn't come down first. I would be an absolute put seller down near like this 100 and 200 MA. And break at 133's breakout area. I'd be selling like 125 or below puts. In the meantime, I liked, remember I talked about booking profits, and I don't want to look back just yet until at the very least we break the downtrend line. I don't think you're going to get creamed in Facebook, but I think the upside might be limited for a little bit. Netflix. Sadly, I think that the measured moves and the 1.618 is going to cap the upside. I do think that there could be. I'm an absolute dip buyer on this, particularly if there's a bigger market sell-off. I'd be loving to buy a retest of the breakout down here around like 129s, 133s. I'd be an out-of-the-money put seller, but that's a pretty big move, right? I don't know that we're going to get it so quickly. 50 MA, key. 100 MA down here. Any moves down into that area, I think you could try right or right out. If you're bearish, do some put ratios, like buy here, sell here, sell here. You could even like spread it out, like buy one, sell one, or whatever, or buy one, sell two here, or I'm sorry, buy one, sell two down here. That's sort of my thinking with Netflix. I think the upside's a little bit limited. It may get it, but I do like it on dips. The Goog above the channel high, looked into it and failed. Now up. I'll keep it simple like Apple with that emotional day, and you have two times low in the 20 MA here. Anything below 940.06, I like short for the gap fill. I don't know if you'll get it so easily, but I think you could at least see the 919, which is the low end of this kind of gapped up range. But I would suspect that you could retest this kind of breakout and gap fill. Anything above 960.99, I like long for a move still higher. Maybe the race to the 1,000 would be on. NVIDIA, big league bullish. Remember, someone asked me, I think I mentioned this in the last video, I did, that someone asked me what do I think is going to happen with NVIDIA now. I said it wasn't down on earnings, so we'd probably make new highs. Done. Got a decent pullback off the 1.618, but now back up at it. I think NVIDIA is going to chop sideways and maybe even go higher for the 2 times range to the 146.35. So I am definitely a buyer on NVIDIA. Anywhere near the 120 area, I like selling out of the money puts. So that to me is a good one. Tesla. Alrighty. So we got the target here, the 1.618 fib extension. Pulled back to retest the breakout, now back up at it and now pulling back. I think this is just going to chop sideways for a while and frustrate the heck out of the bears. We have the Model 3 launch coming, and then in September, I believe, we have the trucks. So any pullback to trend, whether it's sideways or by price, I know there's going to be a lot of talk here about double top. Maybe. It's possible. I've seen this happen in the summer before. I just think that this is going to chop sideways and frustrate. I think selling out of the money strangles, again, will be a winning strategy in that. Now, this one isn't one I follow very often, and I apologize for being remiss on it. This Autodesk, holy crap. This is a pretty big gap up, and I cannot say that I'm going to chase it up here initially. What I would be interested in doing is watching this week and seeing if it can hold like for a few days sideways or even test into the gap and then come back in like a look below and fail. I think you could buy stop it up over 112.18, but I really want to see like do the 3-day rule, wait a couple of days and see how it goes. I tend to think this is going to see higher, but if this does do something like fill the gap, I'm a put out of the money put seller anywhere near this 50 MA. I think that like you have the consolidation channel. It broke out above it. Any retest of the backside of it, I think, is a screaming buy. Price line. Channel high, we talked about this. Gap down, futzing around at the 50 MA. I think you could try this short below the 50 MA for at least a move to the 100 MA and maybe even the gap fill lower. If it holds to the 50 MA, you can still be long. But above 50, long. Below 50, short. Same biz with Expedia. Channel high, look above the channel that failed, came down, chopped, eventually went lower. Probably going to be the same thing. I like Expedia. I think it's actually better than Priceline, their business model. But 20 MA here is the key. Notice a lot of that conflict with the NASDAQ. Look, gap below the 20 MA. And then once you got back up above it, higher, held it, 20 MA is key. Long above, short below. Keep it simple, silly. Snapchat. So I'm in the weird place of being long-term bearish, short-term bullish. This held the IPO range and the kind of the channel low that I've now drawn in. I am a buyer of Snap near 1927 to 1887. I'm actually currently short, I think, 18 puts in this, and I think that area is going to be supported for a while. This probably will fill the gap. My guess is it'll come down again, maybe retest the lows or try a higher low, and then maybe rally a little into the next earnings where it could get whacked again. We'll see. Anyway, that's my story. I'm sticking to it. If you like my video, hit the thumbs up. Leave me some comments to help me make the videos better, help me help you. And if you're not following me on Twitter, my handle is @JustinPulitzer. If you were interested in that biz that I was talking about with the public health statistics, look below in the description. You could also see the order in which in all my videos where I list the stocks, and I'll put that link in there as well. Have a great rest of your weekend, and cheers.